This is your teacher Haris Bhatt, and you are seeing my YouTube channel, Learn Accounting with Sir Haris. Today, we are going to solve our topic of A2 accounting, and that is from standard costing. A2 accounting, and the topic is basically, and that is from standard costing. In May-June 2025, 42, we are going to have question of investment appraisal, and we are going to have a question of standard costing with some part of budgeting also. Maybe purchase budget or production budget or some part or some relevant theory regarding budgeting will be examined in the exam. So let's solve this question. This has come in October, November 24, 42. So it's our variant. October, November 2024, 42 is the variant, and the question is from standard costing. T Limited manufactures one product which has been on the market for many years. It operates a standard costing system. The budgeted sale for August were 2,000 units. So budgeted sales units were 2,000. The standard cost unit comprises direct material 3 kilo at the rate of 8 each. Okay. So the question is from standard costing I discussed with you. And this question has come in A2. And insert, this is October, November 24, 42. As discussed with you. So the budgeted sales were for August were 2,000 units. Standard unit cost comprises direct material 3 kilo at the rate of 8 each, 24. Direct labors 4 hours at the rate of 15. Fixed overhead 4 labor hours at the rate of 10 each. Always remember that fixed overhead cost is basically consumed or charged according to the direct labor hours. It might be possible there is some other basis to absorb overheads, but generally it is always labor hours. So remember that. So that's why 4 hours and again 4 hours. If it is not written 4 labor hours, we'll assume that labor hours are used to calculate or to absorb overheads. Variance analysis has been carried out for August. The actual results and the relevant variances are as follows. Sales in units are 1,800. That is the actual sales unit. So actual sales units are 1,800 and budgeted sales units are 2,000. Okay, now the actual sales are given, direct material, direct labor, fixed overhead, and actual profit is also given. And variances are given. Sales price variance, total direct material variance, total direct labor variance, fixed overhead expenditure, fixed overhead capacity, and fixed overhead efficiency variances also. So let's see what is the requirement of the question. That is in question paper because insert is given separately. Question paper is always given separately. Read source A in the insert. Explain 2 reasons why a business may conduct variance analysis. Why a business may conduct variance analysis. Variance analysis is basically conducted to find the difference between the actual cost with the standard cost, or the difference between the actual performance and the standard performance of the business. That how much we are going to vary. Our actual results are basically how much actual results are different in comparison to the standard results. And then corrective action, we will take corrective actions wherever there is necessary. It is also used for management by exception because those variances which are heavily differentiated between the two, adverse or favorable, mostly adverse variances are supposed to be, probed, and then we will find out that why there is a difference between the standard and the actual results. We compare the results and then corrective actions are taken where necessary, right? So these are the reasons of variance analysis. Explain how to calculate fixed overhead capacity variance. So let's see. Fixed overhead capacity variance is the difference between budgeted overhead cost and actual overhead cost. Right? Fixed overhead capacity variance is the difference between budgeted overhead cost and actual overhead cost. Actual overhead cost is normally given in the question. How budgeted overhead cost is going to be calculated? It is also normally given in the question, but you should know the formula. The way to calculate budgeted overhead cost, that is budgeted hours into OA hour. So the difference between budgeted overhead cost and actual overhead cost is going to be the overhead capacity variance. because it tells that either you have achieved the capacity or you have gone favorable from your capacity. And how many units, whatever units you are producing. So your capacity has been increased or not. Second, prepare the flexible budget statement for the month of August. So let's prepare that. Flexible budget statement that you will use actual units, but you will use the actual units with the standard cost. So actual units are going to be used, but we are going to use the standard cost. So let's talk about the sales first. I will move back to the question. I'm going to wrap it up because it is not required anymore. So the actual units are going to be 1800. Okay. And if you see the standard cost that is given over here. So 1800 into 3 into 8 actual units according to the standard kgs and standard cost per kg. 3 into 8. So 1800 I will write here for direct material and for direct labor and for factory overheads. Okay. So first, let's talk about the sales first. Sorry. Sales are going to be 1800 units and the standard selling price is not given in the question. So that is a big problem because the standard selling price, if you see, that is not given in the question. But we have sales price variance. So through this variance, sales price variance, we will use the formula of sales price variance and we can find the standard selling price, which is not given in the budgeted data currently available. So let's see. Let's calculate that. I'll write here. Sales price variance. Sorry. Sales price variance is the difference between, yes, actual units sold multiplied by actual price and again actual units sold multiplied by standard price. We don't know the standard price. So the difference between these two is going to be the sales price variance because that is because of the price difference. So the actual price we can calculate. How, sir? 239,400 is the actual sales. If I will divide the actual sales with the units, actual units, I will get the actual sale price. So let's calculate 239,400 divided by 1800. I will get the actual sale price, that is 133. So let's write the amounts in the formula. 1800 into 133. And we already have the amount with us of the actual sales. That is 239,400. So I'll write here 239,400. Now, as the variance sales price variance is already given in the question, and the actual units we can write here actual units multiplied by standard price. We don't know that, but we know the variance. The variance is sales price variance is 5,400 favorable. So I will write here 5,400 favorable means that the actual units sold into actual price, this 239,400 amount is more than the actual units sold into standard price. Means the above value is higher than the lower value. That is why we are going to have a favorable sales price variance because the actual price is more than the standard price. So you can take the difference of this. That is 239,400 minus 5,400. So 234,000 is going to be our actual units, the answer of actual units into standard price. Now 234,000, I will divide 234,000 with actual units 1800. I will get the standard selling price and that is going to be 130. So this is how we are done with that. Now we are going to calculate the flexible budget, and flexible budget is always calculated on the actual units, but the rate we will use, that is the standard rate. So sales we will calculate first, that is actual units are 1800 multiplied by standard selling price is 30. We have already calculated that. We can do that easily now. And the amount we already knew, that is going to be 234,000. Okay, now let's cost of sales. Direct material is 1800 multiplied by what is the standard cost for material 3 kilo at the rate of 8 per kilo. 1800 into 3 into 8. So let's multiply that. 1800 into 3 into 8. That is 43,200. Okay, now we'll go with the direct labor. Direct labor, we will have 1800 multiplied by 4 into 15. 1800 multiplied by 4 into 15. So let's multiply with this. Into 4 into 15. We'll get the amount 1,08,000. So right here 108,000. Now factory overheads. That is going to be 4 labor hours at the rate of 10 each for factory overheads. So 1800, obviously labor hours are used to absorb overheads, into 4 and into 18. I think so the rate is standard rate for overhead absorption rate is 10. Sorry. So 1800 into 4 into 10. So that will be the amount for the overhead cost. So we can write here. Let me calculate it. 1800 into 4, 7200, and into 10, that is going to be 72,000. Now please go for the total and we'll find the profit. That is going to be the flexible budget and flexible profit. We have calculated through this way. So let's go for the total. 43,200 plus 108,000 plus 72,000. That is 223,200. If you have any problem, you can ask me. I will write here 223,200. Okay. Now the profit is going to be 223,200 minus 234,000. So standard profit we are going to have 10,800. I will write here what is the standard profit or flexible profit, you can say, whatever you want to go for. So this is the requirement. We are done with that. Now let's move forward. I hope you got it, because the rates are used that are standard rates. Now variances are given and he basically, our next question is basically from investment appraisal. This is the question paper. Flexible budget statement we have prepared. Now prepare a statement reconciling the flexible budget profit in C with the actual profit. Only 3 marks. Now I'm going to reconcile the reconciliation of flexible profit with actual profit. So we'll start with the flexible profit, and all favorable variances will be added and all adverse variances will be subtracted, and we can find the answer easily. Let's calculate the, let's write the flexible profit. That is 10,800. Now we have sales price variance. Always remember that sales volume variance will not be taken into account while calculating reconciliation from flexible budget with actual, flexible profit with actual profit. Sales volume variance will not be taken into account. Why, sir? Because flexible budget may or actual budget may, the difference is because of the rate, not because of the units. So sales volume variance will not come because sales volume variance is because of the difference of the units. In both flexible budget and in actual budget, the units are going to be the same. So there is no change. So sales volume variance will not come, though it is not given also. Total direct material variance 1440 adverse. So if it is adverse, it will be subtracted. Total direct material variance 1440 adverse. Yeah, normally we used to go for material price variance and material usage variance. But remember this, that the sum of material price variance and material usage variance is going to be the total direct material variance. So we can write total direct material variance and we can subtract the adverse variance like that. Then total direct labor variance is given 1980 favorable, that is going to be added. So I will write here total direct labor variance amount is 1980 favorable. So that is going to be added. So I will write it as a positive sign. Next is our fixed overhead expenditure 4,000 adverse, that will be subtracted because overhead expenditure variance is will come in this calculation. 4,000 adverse, so it is going to be subtracted. Then we will write overhead volume variance, but here overhead volume variance directly is not given. We have been given overhead capacity variance separately and overhead efficiency variance separately. Combination of sum of efficiency and capacity will be our overhead volume variance. Because it is not given, so I will use both variances together. That is going to be fixed overhead capacity is 1600 adverse, that is 3600 favorable. So 1600 adverse is going to be subtracted and 3600 favorable is going to be added, and then you will find the profit which you require, which is the standard profit, actual profit. We start with the flexible profit and we have reached to the actual profit through variances, right? Adverse variances will be added and favorable variances will be added and adverse variances will be subtracted. So that is going to be 4740. So we are done with that. Now let's move on to the next part. He didn't ask us to find variances actually. So this is a little different question, but easier one. Different hai, but आसान है, मुश्किल नहीं. So let's go for the next part of the story. The actual labor hour rate in August was 15.5. Actual rate is 15.5. Explain the likely reason for the favorable direct labor variance of 1980 with reference to the analysis of its two sub-variances. So let's do that, and we'll go with the two sub-variances also. I'll write it down. Right, what is the amount of two sub-variances? So see, first labor rate variance we can calculate, and that is the formula is going to be actual hours into actual rate, which is now given, and again actual hours into standard rate, that is also given. ये समझाने के लिए बता रहा हूं मैं. So actual hours given in the question. Let's see, either we have an idea about that. Yeah, we can calculate that. 106,020 is going to be the actual labor cost, and he has clearly stated 106,020 actual labor cost, and he has clearly stated that the rate per hour is 15.5 actual rate per hour. So I can calculate the hours, actual hours. How come, sir? 106,020 and 106,020 divided by the rate, and the rate is 106,020 and the rate is 15.5. Okay, so I'll divide it with 15.5. So this is how you will get the actual hours, 15.5. This is the rate actually. The amount is already known to us, 106,020 divided by 15.5. So 6840 is the actual hour. You can do that also. 106,020 is the actual labor cost. Actual hours we don't know, which is 6840. We don't know actually. Into rate is 15.5. Now you can calculate 106,020 divided by 15.5. You will get the actual hours. That is 6840. We have so many questions coming like that in the paper also. That is 6840 into the standard rate now for the labor. Let's see what is the standard rate for the labor. The standard rate for the labor is going to be 15, right? So it means that we are doing right. That is 15. So I can calculate that. 6840 into 15. That is 102,600. 102,600. So it means that we are going to have an adverse labor rate variance, which is very clear that the labor rate variance is adverse because the answer is in positive. Always remember that the answer is in positive for a cost variance, it means that is an adverse variance. So why? Let me make you sure. 106,020, let me calculate it first, minus 102,600. That is 3,420. So this is positive 3,420, but basically it is adverse. Why, sir? Because if the actual cost is high, it is adverse. It is a loss. Positive variance means that the actual cost, labor cost, is more than the standard cost, right? But should have been incurred. So that is why 3420 adverse. Why? Because we are making more payment to our labor. Our payment per labor hour should have been 15, but we are making payment to our labor as 15.5 per hour. So we are paying more than, maybe because they are more skilled and they are maybe more efficient, and maybe because of that our total direct material variance, I think it is favorable. Total direct material variance is favorable, yeah, because they are basically making less wastage of direct material. They are not making, because of the labor skill, we are paying them at a high rate. So the labor material variance is favorable because there is a less wastage of material, because they are efficient. That's why. So is total direct labor is favorable. Now, what is the question? Let's see. This is adverse. Okay. Let me go for the question again. Explain the likely reason for the favorable direct labor balance of 1980 in the analysis. So it means that we are basically we have highly skilled labor and the variance is adverse. Now I have to calculate the labor efficiency variance. But sir, that is adverse. It is said that should be 1980 favorable. It is adverse aa raha hai, wo bhi 3420. It is a combination of rate and efficiency variance. I haven't calculated efficiency variance yet. So let's do that. That is, the formula is actual hours into standard rate, and then standard hours into standard. Then standard hours into standard rate. The standard rate is quite normal. It is already given. Actual hours is also given. We have already calculated. So I can write the above portion easily. 6840 multiplied by 15. The amount is already given to us. So we are least bothered about it. I mean, we should not be worried about it. It is given over here. And the amount is 102600. Now, the rate is the same, that is 15, but standard hours, that is the important point. Standard hours beta means actual units according to standard. Actual at standard. Actual units per standard के हिसाब से कितने घंटे लग रहे? They are known as standard hours. तो देखिए actual units हमारे पास कितने हैं? 1800, not 2000. और standard के हिसाब से एक यूनिट पर कितने घंटे लग रहे हैं? 4. So 1800 into 4, we'll be having 72 hours. So the standard hours are going to be 7200. We have already calculated them in flexible budget, but in formula we will use it in a different manner. So 1800 direct labor, actual units are 1800, and according to standard, we should use 4 hours on each unit. So 1800 into 4, the standard hours are going to be how much? 7200. Okay. Now let's multiply this. 7200 into 15. That is 1,08,000. So this is why our variance is adverse, because we are making payment to more. We are making more payment to our labor. Should have been paid 15, but we are paying 15.5, but they are not skilled. They are taking longer time to produce the same units. Right? They are taking more time to produce the units, and that is why that is 5400, and that is going to be negative. It means it is going to be just a minute. That is going to be favorable. So according to the criteria, we should have taken, I'm sorry, I did it wrong. We should have taken 72 hours to produce 1800 units, but actually we are taking 6840 hours. It means that our labor is skilled, and that is why skilled labor is more expensive. So skilled labor is more expensive. They are taking less hours. Actual hours are less than standard. Should have been taken 72 hours to produce 1800 units, but they are taking 6840 hours only, because the labor is skilled. And why it is skilled? Because they are expensive. We are paying more to them. And that is why they are efficient, and their labor efficiency variance is favorable, 5400. And our labor rate variance is adverse, 3420. And overall, we have 1980. Sorry, 5400, 3420. And overall, we have 1980 favorable variance, labor variances. So this is how And because the same reason, because our labor is skilled and we are paying them high, that is why our total material variance is also favorable. Because as I discussed with you, they are going for less wastage of material. So definitely हमारा material usage variance जो है वो भी favorable होगा. Okay, वो material कम waste कर रहे हैं. जी, देख लें इसमें कोई problem है तो मुझे बताएं. You have to go for the calculation of these variances if you want to answer this particular point of 4 marks. The directors are aware of an upward trend in the direct material price. To keep the current profit level, they have two options. Obviously, material usage variance तो शायद उसका अच्छा है, लेकिन problem is this that the material price is getting higher, and our total direct material variance is currently favorable. So they have two options: modify the existing product so that it requires less direct material, reduce the advertising cost by 1/3. Right? To advise the director which option they should choose, justify your answer. And that is the 7 marks question. So if you modify the existing product, maybe the customer will not be attracted to that much. Maybe the quality of the product will reduce. Maybe your overall sales volume will decrease, right? And maybe because of the less direct material is going to be used. So even the material is expensive. Even the material is expensive because of less use of the material, our variance will still be positive. Means we don't have to incur much cost because we have modified the existing product because it required less direct material. But it depends that if the customer is ready to purchase that product. If they are ready to go for the modified product, maybe it is improved one, but either it is according to their liking. The customer demand will stay the same. So we have to go for a market research for that first, and then we should choose that option. But I believe that option 1 will be the better choice. Reduce the advertising cost by 1/3. So we have to reduce the material price, we can increase, right? And because of that, obviously, our material variance might go adverse. But advertising cost, we need to reduce the advertising cost by 1/3. Advertising cost is basically a fixed cost. So it will affect our expenses and it will affect our overhead cost. If you see our overhead variances in the question, sorry, the overhead expenditure variance is adverse. Already it is adverse. So it means that we are already our overhead cost, we are incurring more overhead cost than we should have incurred. It is already adverse. And fixed overhead capacity variance is also adverse. Right? Efficiency is though favorable, right? But capacity is also adverse and expenditure variance basically is adverse. So if we increase the advertising costs, our expenditure variance will go more adverse, right? Because already we are incurring more fixed cost than the standard. That is why our expenditure variance is adverse, because expenditure variance is the difference between actual overheads and the budgeted overheads, right? So that means that the actual overheads are more than the budgeted overheads. That is why it is adverse 4,000. So it is not good to increase the advertising cost because reduce the advertising cost. Just a minute, what is the question? It is reducing or increasing? Okay, so reducing the advertising cost by 1/3, it might be possible that it will also affect our expenditure variance. Because our expenditure variance is adverse, so it can improve our expenditure variance. Means expenditure variance can become positive because of that. But we have to see that either reducing the advertising cost will go for a downward trend in sales. It will not attract customers to that extent, right? So that will also need to be considered. That because of that, overall sales might be decreased, right? Because advertisement is, the main source of getting the customers. And that is how we are basically launching our product, right? So I think that I should go with the option 2. Why? Because reducing the advertising cost by 1/3 will become our overall expenditure variance also favorable, because we are giving more, we are spending more, maybe we are spending more expense on advertisement, which is not required to that extent. That is why our expenditure variance is, overall expenditure variance is adverse. So option 2 would be the better choice, because if you go for option 1 and modify the existing product, it might not attract the customer at the same level, right? And customer might ask us to reduce the price also because they believe that this is a new product, different product, it requires less direct materials, so we should decrease the price. So that will give a bad impact. Option 2 is a better choice according to the variance analysis because it will also help us to improve our overhead expenditure business because that will also be on the lower side because currently it is adverse. Okay, so that's it. Any problem? Thank you very much. Inshallah, in the next class, I will go for another question of standard costing, which is again be a difficult one. Thank you.